Mayuresh Joshi from Angel Broking joining in to give us a sense as to what should be the strategy in this market right now. Mayuresh, afternoon. It's once again third consecutive day now on the trot that the markets are in negative. What are you advising clients?
Afternoon, Priyank. I think clearly what is happening with China, the global situation when it comes to how the Brent situation is panning out, and clearly even on the domestic side, earnings not expected to pick up meaningfully over the next couple of quarters. The CapEx cycle taking longer to revive. Are a few key negatives that the markets are probably factoring at this point of time. And again, I think the budget session will be keenly watched out for. So whatever reforms are expected to come through, I think that's again going to be a wait and watch for the market. So clearly, I think all these factors are playing out on our markets, and we're not expecting a huge rally probably to take place, at least over the next few months. I think the volatility in markets will continue. So it's going to be more stock-specific action, in my opinion, over the next few months, rather than playing on the indexes.
Mayuresh, the worry this time is that we've seen a similar situation in September as well, led by China jitters and the way the markets hold off across the globe. This time around, will there be somewhat of a rebound? Because that's where really the bet is. Will the markets, after this kind of correction that we're witnessing over the last couple of days, and even if the markets were to go somewhat lower, do you think there will be a case for a rebound, or you believe this time around it's going to be tough for the markets to claw back?
No, clearly, I think the range for the markets might still continue. I think the range that we are probably working over the last few months of 7,500 on the downside, 4,200 on the top end of the band. I think that band might probably just continue over the next few months. It's a large band, but the markets have been gyrating between this band. Having said that, probably I think the right approach for the markets right now would be how the currencies pan out, because what is happening in China will have a definite impact on a lot of emerging market currencies. And though we are very comfortable in terms of our forex positions of around 352 odd billion odd dollars, we're going to see still some amount of pressure when it comes to the export competitiveness, at least on the non-invisibles. So clearly, I think the trade data is something to be keenly watched out for over the next few months, and how our competitiveness stands out. And that will also have a profound impact on the way a lot of the sectors we export probably will pan out. And again, I think the domestic demand situation needs to improve, which again is languishing at this point of time, both on the rural side as well as on the CapEx side. So the supply side has to improve. I think the demand dynamics need to pick up, at least on the consumer discretionary fund. So I think all these factors would keep the markets in check. But again, I think the range that we're probably talking about, I think the market should be gyrating between these ranges.
Right. Mayuresh, we've got RIL in action today on the back of some positive brokerage reports that have been coming in on the counter, saying that 2016 is really the year for Reliance. What's your view? It's up almost 3% now.
So I think I've always been maintaining that Reliance is one stock that I'd probably look at. And again, I think the kind of capex that they've done both on their core business as well as the telecom vertical, I think the telecom capex probably ensured that their ROE is probably stay below 12.5%. But clearly, I think with the capex cycle ending, with new capacities probably coming up, with a lot of commissioning happening, both in terms of petro gasification, new plants coming in on the PTA side, I think the difference would be very, very evident when FY16, FY17 numbers start coming out. So I think if you're looking at a base effect from FY17 on FY16, our take is that the numbers will be very profound when it comes to the key business verticals of petchem and refining, which are going to be the key drivers. Yes, I think shale business might disappoint, but I think retail has done exceptionally well for Reliance. And as these capacities start coming in over the next few quarters, our take is that the earnings trajectory will be much more stable for the company. So clearly, I think we're still maintaining a very positive stance on Reliance. But again, the view has to be more than a year, because I think the numbers will start going over the next 2 to 3 months.
All right, one final word there, Mayuresh, on the new listing as well. Narayana Hrudayalaya is actually at the day's highest point, 30-35% gain is what we're seeing on this, 36% now on the counter, 340 almost on the stock. Any thoughts on this?
No, clearly I think very surprised by the move, because not expecting such a kind of move from the company itself. Because if you look at the core dynamics, I think yes, the top line has grown over the last 2 years at 30%. The EBITDA has grown at 23%. But the kind of expansion that they've done on the operational beds part of almost 40% over the last few years, and I do a simple comparison check with the existing hospitals like an Apollo Hospital, I think the compounded growth rate was quite humongous. Having said that, probably I think the occupancy levels still remain a little lower than what the normalized rates are for the comparable peers. And again, I think the EBITDA margins are lower. So again, on a valuation parameter at this current juncture, I think it would be trading at expensive levels compared to a Apollo Hospital. And clearly, I think for the hospital business itself, I think the gestation period is quite high, around 3 to 4 years, to to say the least. So I think the newer hospitals, once they start coming in, need to have that gestation time period before they can start contributing to profitability. So clearly, from a fresh investment perspective, I think I wait for declines. I think the stock has moved ahead of earnings, and again, valuation is looking very rich at the current time.
All right, you were just talking about Reliance, Mayuresh, and that once again, it seems it's taken the ownership today of giving some support to the index. It's up 3.2, 3.3%. Take a look at that. One of the only significant weight counters that's actually performing in an otherwise weak market. The next one is Cipla with a 1.4% gain. RIL clearly just getting pretty excited today, and it's moving towards a 1050 level, which we'd seen a couple of months back or so. 3.1, 3.2% higher is what we're seeing as far as Reliance is concerned. Mayuresh, just once again, to reiterate the strategy on Reliance Industries, how would you play it?
No, clearly, as I'm saying again, I think it's not a quarter-on-quarter strategy that you can probably play with as mentioned earlier, with new commissioning expected to come through over the next few quarters, with telecom expected to start contributing for FY 17. FY 17 numbers for Reliance will be much better when you're talking about 15 and 16. The capex is largely done with. So I think the compression that you probably saw in ROEs for the company because of the huge telecom capex that they've done would largely be over. So I think the cash flows will start improving from the core businesses of refining and petchem. And that, I said, is very, very profound and evident from FY 17. So clearly, I think it's a couple of years time horizon. But clearly, I think this stock will do well over that time period.
All right, Mayuresh, fair enough. Thanks for taking the time out and getting us that quick take there in terms of what you're tracking as far as Reliance Industries is concerned, and also the outlook for the market. Talking about that, just to get the index going once again, you've seen a considerable cool off from the day's high, but somewhere there's an attempt being made for a little bit of a recovery. And the one stock that's really leading it and providing the major amount of support is Reliance Industries, with a gain of almost 3% on the stock. That's Reliance Industries on an intraday that we're noticing. All right.